When I shut down to come to the classroom, I closed my NASDAQ. So I watched crude and I saw the trade. So I took it on Sim. Good morning, everybody. Mike, Squirrely has very little to do with the markets that you trade, but rather your trust in the method, your adherence to rules, if that makes sense. And then, Andy, do you see how if you were going to hold until you got a close on the wrong side, that's where the momentum is gone. So it's not a let's give it room to wiggle just in case. It's the man, my momentum's gone. F this trade, I'm done. So that's kind of how trading needs to be, guys. Trading has to be a product. No, you'll get there, Mike. You will. If you keep it simple, you'll get there. There's no doubt in my mind. And my reminder, dude, you're new. You are so stinking new right now. Man, enjoy being new. Enjoy the freedom of making mistakes and enjoy the excitement of learning. Guys, you've got nothing but time in this world until it's over, I guess. So um, don't be in a hurry to be at the finish line. Just get a little better every day. Get a little better every day, and you'll be absolutely floored at where you've ended up. So enjoy the ride. I'm telling you guys, it's fun. It's fun to learn, and it's even more fun to recognize in your own trading that you're in a place that you didn't realize you would be. Um, yeah, during market hours, Andy, it's quick. Um, NASDAQ charts for the last 6 months with Mike Hunt. Oh, it's not that you were trading them wrong, Mike. It's that Mike has a different plan. Mike has a very different plan that's so outside of what I teach here. His plan is perfect for him. But the one thing, and when Mike comes and posts in my room, I always throw the disclaimer in there. Mike's got 9 years of trading, right? 9 years of trading. So he's got this confidence, or at least 9 years of trading Nexgen, 10 years of trading Nexgen. He's got this confidence with what he sees on the chart that even I don't have looking at his charts. I don't see what he sees. But he is so in tune with his patterns and he's so in tune with his rules that he makes these things look effortless. He really does. Got a lot of respect for him and what he's accomplished. And the fact that he always wants to help people. And he always does. He loves to help people. But John Novak is the same way. John Novak is freaking brilliant and sees things on charts that I don't even see and manages trades better than I could ever manage them. And guys, it's nothing more than experience. That's all it is. It's experience. And the challenge that we have when we're new, and I say we because I've been a part of it, guys. The challenge that we have when we're new is we want to trade like we have the experience of the people teaching us. Does that make sense? You see people with 10 years and you want to trade like them because that's your goal, right? Your goal is to be where they are, but you have to remember where you are currently. And absolutely, Adriana, think about what you were doing 3 months ago. Think about where you were 3 months ago, frustrated and confused, and now you're posting these trades that are confident, and it just takes a little bit of time. So guys, don't try to rush the experience factor. Don't try to cram 10 years into 2 weeks and then frustrate yourself because you're not that good. You will get there. You absolutely will get there. We'll get there together. That's half the fun. That's half the fun for me, guys. My favorite thing teaching this class is watching you guys grow. True story. So I take that parental role and I nitpick a little bit, right? I nitpick. Man, let's talk about language when we're annotating charts. Let's talk about what kind of trade it is so we know how to manage it. Let's talk about termination conditions so we don't trade into them. Guys, everything that this class does is designed to keep you on the correct side of things until you have that experience to build your own plan. So there's our soapbox this morning, right? Let's get into it. Let's have some fun. Yeah, you can't compare each other, right? Adriana, I probably grow a thicker beard than you. Maybe, I don't know. So it would be silly to compare the two of us. We're apples and oranges, right? You're probably prettier than I am, and Andy's a better nurse than I'll ever be, and Morgan's just jacked. Look at his picture, right? And Rob will farm better than I will ever farm because I don't have the experience, right? So, guys, enjoy your ride. Enjoy being you and where you're at because you won't stay there. You won't stay still as long as you're doing stuff to move forward. And that's what I do every day, guys, is I try to push you forward just one more step every day. Right on. El Paso. Have fun there. Guys, can you hear me? Give me a Y in the room if you can hear me. I want to make sure it's not just Pete. It might be Pete. So let's tell Pete, do the reboot. Awesome. And then, guys, good morning, John C. If you ever lose audio, post it in the room. I'll ask everyone if they can hear me. If you see a whole bunch of Ys, it means that it's you. Yeah, Morgan, you probably will. Jason will be able to take care of that for you. No worries. And it doesn't take long at all. And I don't know that you need to get a second license. I'm not sure how it works because my last name is Novak. So every time I need something, John just gives it to me. Yeah, just submit a ticket with Jason. He'll get you squared away. He'll build you a file and make sure that you're good. Good stuff. Guys, every morning I check news. Every morning I go to forexfactory.com/calendar because everything that I do every day revolves around advantages. And if I trade into red flag news, guys, if I trade into even orange medium impact, Rob Novak, change that name, we'll see what we can do. The market may react a little crazy, guys. There may be a spike. There may be a complete change of direction. It might be too volatile to trade. So anytime I see this red, anytime I see this orange, I just say to myself, I'm not trading. Not yet. So I drop that link in there, forexfactory.com. And then we go back to, and I say the same thing every day, right? Guys, everything comes from this trading guide, from the website. Everything that I talk about, everything that you need to be successful will be given to you in this class. The only thing that I can't give you, the only thing that I don't have a magic pill for is the experience, guys, is the repetition, is the practice, is the feedback. You've got to do the work to get to where you want to be. Joel, you're one of the people that when I talk about success stories, Joel, everything you post is amazing these days. And you went through the process. You went through the process of market replay, of posting pictures, of asking questions, of being frustrated. And then it clicked. And we all get it at our own time. So, guys, this is the trading guide off of the website. And the most important thing that I can share with new users is this definition from the Glossary of Common Terms right now. High probability trades. Why? Because high probability trades, each indicator on every chart agrees for the rules for the trade. Triggers are their strongest, no termination conditions exist, and there's no trouble spots between your entry and your target. Guys, this is when trading is easy. This is when trading has the highest chance of success. This is the trading that creates confidence, guys. So we're going to talk about a high probability trend trade in the first hour. We're going to talk about the trade that typically wins 70 to 80% of the time. We're going to talk about the trade that creates confidence, the trade that teaches you to read your indicators. Because once you learn to read your indicators, guys, you're going to understand where the market is likely to continue. This becomes an entry. You're going to understand where the market is likely to go. It's an outstanding spot for taking profits. And then most importantly, you're going to understand where the market is likely to stop. And this is very often where the market is likely to go. And we call these termination conditions. 90% of your day, ladies and gentlemen, excuse me, will be spent staring at indicators. 90% of your day you'll be doing absolutely nothing. Guys, I've taken one trade this morning. I was up at 5:30 a.m. Central, and I have taken one trade this morning because I only had my rules met one time. So what is that? 5:30. It's 8 o'clock right now. In 2.5 hours, one trade, guys. That's not a lot. But I'm over halfway to my goal. I'm $110 short of my goal from that one trade. So patience. I want you to have patience, and I want you to focus on being a chart reader initially, because that's where everything comes together, guys. Being a chart reader is what sets you up for success. Being a chart reader lets you know that your rules are met. And we're going to keep it really simple today, guys. We're going to talk about a trade that only has 3 rules. 3 rules that create 3 advantages. 3 advantages get you into the trade, guys. And let it be that way initially. Why am I in this trade? Not because I think it's going to go up. Not because I hope that it goes down. I'm in this trade because my rules are met. And when my rules are met, the one thing that I am absolutely, positively, 100% sure of is that I have a statistical advantage, that I have a set of advantages that have been back tested, that have been proven, that are testable for you guys, that let me know that this is a setup that wins more than it loses. This is a setup that typically wins 70 to 80% of the time. All it is a pattern. And that's the beauty of it, is all we're doing is learning patterns. We're learning patterns that repeat themselves, and then we're being patient and waiting for those patterns. So we're going to take 3 rules, 3 advantages. We're going to call that a high probability trend trade. We're going to do it on 2 charts. The first chart is the large chart, and the large chart will define, excuse me, direction, momentum, and areas. Your first 2 rules for the high probability trend trade will come to be on the large chart. Once the rules are met, guys, this 1 bar's worth of information, and typically it's the most current bar, but I did this historically so that you could see all the motion. Inside of this 1 bar on this slow moving chart, you're going to see 20 to 30 bars on a smaller, faster chart. The box around this bar is the box around these bars. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's about 25 bars. We're going to use this refinement process, this x-ray of the large slow bar, and this is going to pinpoint exactly where the market is most likely to continue. This is going to be your entry chart. This is the chart that's going to tell you, hey, go short right here, sell Fibonacci resistance. And guys, it's this refinement chart that allows you to reduce your risk and maximize your profit potential. So we're going to take 2 charts, only 3 rules. And guys, we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. I'm going to give you very clear visuals of what it means to have your rules met. I'm going to give you very clear definitions so that you have something solid to follow. We're going to talk about each rule individually. We're going to break it down. We're going to find examples. I'm going to show you how to study. But you've got to learn the rules, because once you learn the rules, you will begin to speak to yourself in terms of advantages. You'll never say, I hope the market goes up. You're going to say, I have momentum, and there's nothing in my way. Let me find an entry. And guys, once you trust, once you have that trust, the fear starts to go away. And it's pretty amazing how it happens. And you almost can't even fathom it as a new user. But 30 days in, you're like, oh, I know this look. I have to get in. My rules say to get in. Simulate, guys, practice, make mistakes, trade into areas, fight momentum, do everything wrong on that simulator. But here's the key, is you gotta post it in the room. And you can't just post a picture in the room and say, this looked like a good opportunity, right? Don't just post in the room and say, ugh, or don't post in the room and say, man, I was hoping, tell me what you saw. Tell me what was happening on your large chart. Did you have those advantages that we teach? Be sure to show me where you entered on the small chart. Show me where you exited on the small chart. Magenta, which ones, Rob? The dots or the line that comes off a pivot? Because there's only 2 fib colors. There's red There's red and there's blue. That's it. Those are the only fibs. There's red and there's blue. There's yellow one-to-ones. Here we go. This is a divergence high line. Let me drop this in the room for you. This is a great map for what you're looking at. There's divergence high lines and there's divergence low lines. There's red Fibonacci resistance, blue Fibonacci support, and then there's that mid band that runs through the middle, and if price is below it, it's magenta, and if price is above it, it's green. Pretty cool, right? So there's your map. Let me know if you need anything from that. Guys, simulate your trades. Every day, practice, 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 practice. But don't omit the step of annotating your charts and taking those pictures and getting them in the room, because posting your trades in the class, guys, this is the beginning of the step-by-step process to becoming confident. Every time you post in the room, every time you drop a picture in that room, guys, we're going to talk about it. We're going to talk about what you saw. We're going to talk about the advantages. We're going to talk about your entry. We're going to talk about your exit. That's divergence, Rob. Off of the top pivot with the big negative number. Yep, that's divergence. That means there was a loss of momentum at that pivot. Great question. So guys, posting in the room. Hey Mark, this is what I saw. Did I see it correctly? Hey Mark, this is where I entered. Did I get in at the best spot with the least amount of risk, with the most amount of profit potential? And guys, every time you drop in the room, it's a private session. It's you and I working together to get a little bit closer to your goals. We're going to simplify, guys. I'm going to teach you the high probability trend trade today and every day. And we're also going to talk about, about 3 bars later, Rob. We're also going to talk about one medium probability trade. But guys, your ability to catch a medium probability trade is going to be dependent on your ability to understand what it takes to get into a high probability trend trade. Everything I do is sequential. Everything I do is building a foundation and then growing from it. So we're gonna plant that seed of the high probability trend trade. Pete, I'll put it up in just a minute, but it's in the user guide. It's in the if you go to the website, it's a user page. It's right in there, and in the trading guide. I'll get it in just a second. I'm gonna try and keep my flow going here though. The next thing, guys, is using your spreadsheet. Using the spreadsheet that Nexgen gives you when you download the software. I give mine every day in the room. I share mine every day in the room because every day in the room we make more entries to this spreadsheet. So there it is. I just dropped it in the chat box. Please take it. But for you guys finding your groove, the first tab is the most important tab, guys. The first tab is where you're going to have your trade journal, where you are going to post a picture of everything that you've done. Every picture that you take goes into the spreadsheet. Every trade that you take goes into the spreadsheet. Every pattern that you see gets a picture taken of it and put into the spreadsheet. I want you to go ahead and accept the fact that you should be taking 15 to 20 pictures a day. I'm probably already up to 30 this morning and we just started class. And what you're going to do is you're going to come back and study the trades you took every day. You're going to commit to this education process and you're going to ask yourself each morning what worked and what didn't work. And you're going to be able to say before you ever take a trade, man, when I traded with the rules yesterday, I found that I was winning 70% of my trades. But when I broke those rules, I tend to lose. I tend to give some back. And it's going to keep you focused on what you're going to be looking for each and every day. And you'll start to recognize patterns in the market, because that's all they are, guys, is patterns. But you're also going to recognize, and I'm going to recognize, patterns in you. When you drop a picture in the room, and you say, hey, Mark, here's the 10th picture today, right? And I'm just going to use Rob's for example. This is the 10th picture for today, or for the week. and Rob trades into a termination condition again. And obviously he didn't. This picture isn't even a trade. But what's going to happen is I'm going to say, hey, Rob, so now we found a pattern. You tend to hope areas break. So let's come up with a plan. How do we avoid those termination conditions? What's a good way to go through it and not trade into those areas that are likely to stop the market. And Rob and I are going to work together, and I'm going to say, Rob, what you got to do is every time those price bars reach a red line, or every time you think you're going to take a trade, I want you to ask yourself out loud, did price reach an area and are my triggers still below it, or are the triggers still above it? And if you do that, Rob, what's going to happen is you're going to stop trading into termination conditions. And I know that's true because that's how my brother fixed me. So use the spreadsheet, track your trades, recognize these patterns. Don't skip that one. And guys, I posted this picture in the room. The second tab is where each rule of the high probability trend trade is broken down individually. Red, and as Ron pointed out, pink. Pink is red because if it's dark red, you can't see it. So green is the individual picture of what it looks like when your rules are met. Red is the opposite, when the rules aren't met. Guys, I created this section for you guys to do some study, to go back, to recognize the individual pieces so that you can put them together for a trade. And then when they come together for a trade, there's your favorite look section, guys. This is where you're going to build your trading plan. Initially, you're just going to focus on the green section. And you're going to say, this is what it looks like to get me into a trade. This is what it looks like with absolutely nothing moving, with no fear of loss, with no emotion, with no trepidation. This is my pattern. This is my look. And guys, what you're going to find is that you should have the same picture 50 times in there. You should have the exact same look 50 times in there. You should be able to say, this is my large chart look. This is my small chart look. This is the pattern that I'm looking for every day. I'm studying it. I'm looking at it. I'm learning it. I'm believing it. And what happens is you start to slow the market down. The market doesn't seem so intimidating. It doesn't seem like it's moving so fast because you know exactly what you're looking for. And the cool thing is yours is blank, right? You've got some work to do. I've done the work. For the last 4 years, I've been doing the work, guys. And the client trades, there's about 350 pictures of patterns bringing clients success. There's entry sequences for shorts and longs for the high probability trend trade. There's very mechanical management for beginners, but there's also a lot of pictures on when it's okay to hold for bigger moves. There's a whole section dedicated to NASDAQ. There's patterns that repeat themselves. There's termination conditions, and I'm telling you, man, once you learn the patterns, you'll be absolutely floored. I took this picture yesterday. I thought this was pretty cool. So this is 2021 on the left-hand side, guys. This is price reaching resistance with a loss of momentum, pushing all the way back to support with the large triggers not following, price closing the gap to the large triggers, creating a pivot stop out, and then reversing the market. Yesterday afternoon on a completely different market, 3 years later, price reached resistance, back to support in the mid band, closed the gap to the triggers, pivot stopped out, reversed the market. Guys, this is 3 years apart on two different markets. All you're learning is patterns. Remember that. You're not learning to trade, you're learning to read indicators. You're learning to find patterns. And what's going to happen is the more you see these patterns, the more you're going to find ways to take advantage of them. That's what this is for. So don't bypass the spreadsheet, guys. Use it, embrace it, fill it up. If you need help with it, let me know. We're going to learn the rules. You guys are going to practice. We're going to keep it simple, and you've got to know the looks so they become easy. And that's what those pictures do for you. So without further ado, guys, let's go full-blown rock star on it. Let's learn some rules. Wow, what did I do here? That's the wrong one. Hold on just 1 second. I started at the end. I gave away the ending, guys. Spoiler alert. Let me find the rules, and let me start my slideshow from the correct area. There we go. 3 rules for the high probability trend trade. Ladies and gentlemen, I'm going to encourage you to interrupt me. I am going to beg you to interrupt me if you have a question. Don't hesitate if you do. And then Pete, before I get lost and forget, because I do see shiny things and lose track all the time, there's that link for using Market Replay. Oh, there we go. And then, what do you mean where are the triggers, Rob? Sorry, I didn't scroll down, guys. You're welcome, Pete. Where are the what do you mean where are the triggers? And then guys, on your spreadsheet is the how to copy and paste into the spreadsheet. So Rob, while you're typing out your answer there, let me give you both of those pictures on how to post links into your spreadsheet, guys. How to make sure that you're giving yourself the easiest to read. So there's those for you, Rob. And guys, if you just download my spreadsheet, it's right there on the first page as well. Steal my stuff. Take my toys, please. Oh, yeah, where are the triggers? I got you. I got you. I love that phrase, where are the triggers? That's a bacon saver. Totally a bacon saver. So guys, 3 rules. Each rule gives you an advantage. 3 advantages create a high probability trend trade. A high probability trend trade typically wins 70 to 80% of the time. A high probability trend trade creates confidence through the memory of success, and a high probability trend trade teaches you to read your indicators. And once you're a chart reader, you will be absolutely floored at the opportunities that are out there beyond the high probability trend trade. Everything starts with strong triggers. Everything starts with the advantage of momentum, guys. And large chart defines direction. Large chart defines momentum. It defines direction with the color of the background. If the background is green, it's going up. If it's red, it's going down. The easiest thing that you could ever do is go with the flow, guys. The trend of the market is like a lazy river, and you have 2 choices. You can sip a pina colada and go floating by all your friends, or you can fight that current trying to get back to the bar. One is easy, one is hard. And trading with the trend is one of the biggest advantages you can give yourself. And then once you've identified up or down, the only way to have strong triggers, Ron, you're killing me, is if the colors match. The colors of your trigger lines match the background and each other. So, guys, if the background is green, the triggers have to be green. That's it. That's the only way it can happen. If the background is red, the triggers have to be red. If one trigger is red and one trigger is green, you don't have momentum. If the background is red but your triggers are green, or your background is green and your triggers are red, you don't have momentum. It really isn't too terribly difficult. So what are strong triggers? Small triggers, the solid lines, break above the large triggers, the dashed lines. It's the space created between the two that lets me know that the odds are favorable for the market to continue up. This is momentum, guys, and odds favorable momentum is the battle cry in this room. Odds favorable momentum pushes that market in the direction of the trend. Odds favorable momentum can break those key Fibonacci areas. Odds favorable momentum will cover a lot of the mistakes. Ellie is so excited about odds favorable momentum that she's screaming at the top of her lungs. In a downtrend, small triggers below the large triggers. Large triggers are wide. They're angled in the direction of the trend. The colors match, and there's a huge gap between the small and the large. Guys, this is odds favorable momentum. The odds are favorable for the market to continue down. When I have odds favorable momentum up, I'm going to be looking to buy Fibonacci support on a smaller, faster chart, that refinement chart. When I have odds favorable momentum down, I'm going to look to sell Fibonacci resistance on that smaller, faster chart. Guys, let it be easy. You feel that you have 2 dogs watching you? She usually just hangs out and naps during class. Every now and then the Amazon guy shows up or something. She's got to get wound up. Guys, odds favorable momentum is not a forever endeavor. That rhymes, so you know that it's true. Odds favorable momentum is the best of the best. This is when I'm looking to sell Fibonacci resistance in this downtrend. When the small triggers are still outside of the large, guys, as long as they are outside of the large, I have the advantage of momentum. But when one line breaks inside, that momentum is slowing. We are no longer in the high probability range, guys. We are now in a medium probability range because we no longer have the advantage of momentum. you can use your chart reading and still find opportunities there. They just have to be managed a little more aggressively. But when the small triggers break inside of the large triggers, this is a visual. There's a weakening, a slowing of the trend. Anything can happen up or down is what you're going to hear in class all day long, guys. Did you have odds favorable triggers, or did you have anything can happen triggers? Do you want to bet your kid's college fund on odds favorable for the market to continue up? Or do you want to bet that fund on anything can happen up or down? Guys, let the words lead the way. Let the words tell you that this kind of sucks and takes away your advantage. But this right here should get you excited and focused. And then when we get these weak triggers and they hit an area, guys, these are when areas are most likely to hold. These are when areas are likely to stop the market. So if we open up a big chart, let's open up the grand scheme of things. You ready? And I'm going to take one picture here. So guys, what we're going to do is we're going to start learning how to use our TechSmith capture. We're going to start learning how to annotate charts. But most importantly, you guys are getting the keys to the kingdom here on how to become a chart reader ASAP. So open up your capture software and smash that big red button. Hovering over one chart will give you one charts of information, guys. Since we're trading with two charts, you're going to click and drag to do the whole thing. But what we're going to do in this one picture, I want you to see this. I'm going to click and drag, and then I'm going to release. And when I release, it's going to tell me to take the picture, so I click the picture button. And now I have what's called the image preview. This is how you and I are going to have a conversation. So guys, I need a Y in the room. Does everybody see that the small are above the large, that the large are wide, that they're angled in the direction of the trend? Guys, this is strong triggers. This is rule number one. Strong triggers, rule one, it's momentum. Guys, this is, oh my gosh, that's the best look ever. Check this out. It happens going the other direction too. One of the great things about futures is I don't care which direction the market is going. Couldn't care less. I'll make money both ways. So once again, guys, this is strong triggers. Aw, those are cute. This is rule number one. This is momentum, guys. So what I've just done is I have taken a picture. I've identified momentum, exactly what it looks like. And now I'm going to click upload. And I'm going to take that picture and I'm going to send it to the screencast cloud. And I'm going to copy that link that it gives me. And here's what I'm going to do. I'm going to drop it in the room because I'm a brand new user and I'm working on these ideas. And I'm going to wait my turn and I'm going to say, hey Mark, did I do this right? Is that what it looks like, strong triggers going either direction? And you're going to get that feedback, and that feedback's going to be absolutely, you crushed it. So I'm also going to go to the 101 section, and I'm going to take that picture and I'm going to drop it in. And I'm going to say, you know what? I got feedback. It is strong triggers. I don't ever want to forget what this looks like. Let me drop it into my 101 section, because as I learn the software, I'm going to take a lot of pictures of nothing but strong triggers. It is TechSmith Capture. Let me give you a link. That'll be easier. There it is. Yeah, I've had to do that. Go set up laptops too. You don't realize how many things you use until you don't have them right in front of you. And then guys, let me just go ahead and drop the whole link in here too, because this is that tutorial if you need to go back and revisit how to share pictures, how to get them in the room, stuff like that. So guys, I'm filling out the spreadsheet with pictures of momentum, and then once I have it, I can also fill out my spreadsheet, check this out, with weak triggers. Let me take that picture again. Guys, it's the exact same picture. We're going to keep taking this picture for all the lessons. So I'm going to draw arrows again. Man, that's big, isn't it? There we go. I'm going to draw arrows again, and I'm going to use that call out button. And I'm going to say smalls are now inside of the large. This is weak triggers. This is not momentum. Rule number one, not met. Is everybody good with that? So the exact same picture, one picture, what I've done is I've taken a picture of momentum and I've also taken a picture of weakness, exactly what it means to me. What's it mean to have weak triggers? It means that my advantage is gone. It means that the market can do anything. It means that I don't have the advantage. And guys, it's not coincidence. Look what happened with the weak triggers, especially right at a key area. And even when it goes past the area, this weakness says it may push up. Anything can happen, Mark. So is everybody good with that? Strength creates advantage. Weakness robs you of the advantage. Awesome. Rule number 2, guys. Once you have strength, let's look for a clear path. Once you have odds favorable momentum, let's make sure that we're not running into anything. So rule number 2 says termination conditions false. Termination conditions are those likely to stop the market areas. We talked about those initially. You're going to be able to recognize them almost instantly. And when I don't have a termination condition, well, I have a clear path. I have room to my targets. So what is a termination condition? The exact same picture that I dropped in for Rob earlier. They're just lines on a big chart. Don't overcomplicate it. Don't worry about the math that gets going. They're lines on a large chart, and these are lines that may reverse the market based on a comparison of the triggers and the area, guys. These lines on the large chart are where the people in charge are making decisions. These lines on the large chart are where those institutional traders, those people with millions of dollars behind them, are entering, are exiting, are fighting one another. Next-gen users have this crazy advantage of knowing exactly where those decisions are going to be made more often than not. And they're going to be made at blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1s, cyan divergence low lines, magenta divergence high lines. When price reaches one of these areas, guys, it's going to set off a decision-making process. We're going to use the trigger lines to know whether or not we have an advantage. And we're going to do that pretty simple, guys. New picture for you. If price, these dynamic Renko price bars come down and reach Fibonacci support, Ron gave this one away earlier. The only thing that you have to ask yourself is, where are my triggers? If my triggers remain above the area of support, or if it's resistance below the area of resistance, guys, this is a termination condition. This may stop the market. This may create an untradeable bounce. This may create a fight. But the reality is, the most successful traders using the software say to themselves, I don't know what's going to happen right here. Let me stop. Let me wait. Let me pause. Let me not hope. And then when the small triggers absolutely smash through the area, this area has the potential to break, but it's not broken yet. And then when the small and the large get to the other side of the area is now broken, and the path is now clear until you reach the next area. So guys, if you're a brand new user, if you're focused on the high probability trend trade, the only time you're looking for a trade is with a clear path. As you grow with the software, you're going to find out how to capitalize on the potential to break. It all has to do with triggers, doesn't it, Rob? It has a lot to do with triggers. So guys, when we're talking termination conditions at a high, this is a divergence high, guys. This is a pivot. Market goes up and down, and there's a loss of momentum, and it creates that magenta line. This is not a termination condition, because in order for us to have a termination condition, this is where I believe language is very important. Price must reach an area. Price must reach a line on the large chart. So this is not a termination condition because price creates divergence highs and lows. But when the market comes back and reaches that magenta line, the only thing next-gen users have to ask themselves are, where are my triggers? And if the triggers remain below resistance, this is an area that may stop the market. Jonathan, I don't see any large chart annotations, my friend. When price reaches resistance and the triggers remain below, I'm not going long into this area of resistance. When price reaches these yellow 1-to-1s and the triggers remain below, I'm not taking long trades into this area. I'm waiting for the reaction. Sometimes the reaction is a full reversal. Sometimes the reaction is a fight. It's okay. This is being recorded, John, and it will be uploaded. And if you have any questions about anything, man, and you're outside of classroom hours, DM me your questions. I know not everybody can be here all day long. Guys, don't be afraid to reach out if you have something that you need help with. Utilize classroom hours, but not everybody can be here all day. Awesome, Jonathan. So when price is trending down and it reaches these yellow 1-to-1s, guys, if the trigger lines remain above, no trades, support, above, no trades, pivot stop out, right? Here's a pivot. This is your pivot stop out, guys. I think somebody asked, Mark, what's a pivot stop out? Did I miss that question? Somebody asked that, right? There was something about bacon. Pete, you were asking about a pivot stop out. Got it. I knew there was someone there. So a pivot stop out. Let's go to the user guide for this. Guys, when I told you all the answers are in the user guide, I meant it. Let's go to tops and bottoms and let's talk pivot stop out real quick because you're going to hear that. Price goes down and goes up. If there is a loss of momentum, you will see this cyan line print. That's a pivot. Price creates this line. And this line will extend until it's no longer needed. So Pete, when price comes back to that line and the triggers remain above, it's a termination condition, right? And it's not uncommon for these lines to stop the market to the tick. But if price exceeds and then trades back above, we call this a pivot stop out. Here's your pivot. Here's the stop out of anyone that tried to go long, and then it tends to continue. Absolutely, positively, no more short trades when price trades below and back above. The same thing is true. Here's that pivot. Comes all the way over. Price reaches it, exceeds it, trades below. Now it's a pivot stop out. Does that make sense, Pete? So when we're looking at these termination conditions, just a pivot. Now it's a pivot stop out. Just a pivot. Now it's a pivot stop out. And pivot stop outs are powerful, guys, especially when they correspond with Fibonacci resistance or support. And then there's one more time where the mid-band is going to behave as a termination condition, guys. And that is the final termination. Usually it's going to be a fib, it's going to be a yellow 1-to-1, a divergence high or low, but there's times where the mid-band will behave as a termination condition. And we use the gap theory to define it. So if price accelerates away from the large triggers and hits a mid-band, hits a fib, hits a yellow 1-to-1, and those large triggers remain a full bar away, meaning that on your large chart, they are below this reversal bar marker. Or if you're going the other way, they remain above the reversal bar marker. That means that there's room for an entire bar before it hits those triggers. This is likely to close that gap. It's like a vacuum. And I took a picture of it yesterday. It was kind of cool. Guys, I take pictures all day long, and not even of trades sometimes. Yesterday, I took this picture, and I said price reaches the midband, the area, the triggers are a full bar away. The gap theory says that it's likely to close the gap. Notice that I didn't use the words, it has to close the gap, it's obligated to close the gap. Guys, it's likely to close the gap. And then a few minutes later, I took this picture. And this is pretty cool because once you learn the rules, once you study the patterns, you never get suckered into a short trade thinking that you have momentum and the advantage from the top. And what happens is it just keeps you patient and it keeps you waiting. And then guys, because patterns are freaking amazing, there's that next one that I took. And it's the exact same pattern 3 years apart on 2 different markets. And it all stemmed from that gap theory. So when I say learn patterns, guys, I gotta tell you, I believe in it wholeheartedly. There's one more termination condition that we're gonna talk about. And guys, you can't see change on a large chart. The large chart's too slow. The large chart is just, it's a slow moving chart. And you're not going to see the change in those 1 bars. So we use this on a small chart, 3 divergences in the same price range. Three divergences in the same price range may terminate the trend. Three losses of momentum in the same price range may terminate the trend. It's not guaranteed. Once again, we use that word may, but if I'm using the word may or might, it means that my advantage is gone. And three divergences means that rule number 2 is no longer met, that I no longer have a clear path. This becomes more powerful when the small triggers work their way inside of the large triggers. You're okay, Jonathan. That happens sometimes. When the small triggers are inside of the large triggers, guys, does everybody remember that from rule number 1? This is a week anything can happen look. And now it's coupled with 3 losses of momentum. And guys, when that final pivot's higher than the previous or lower than the previous, it creates a head and shoulders and it becomes more powerful still. You'll see this look on a small chart before you ever see change on a large chart. And I was studying these pictures, guys. I go back and study these pictures. Sorry if this is a little quick for you. There's strong triggers on the large chart. Everybody's thinking long trade. Everybody's excited about taking that long trade. All of this information is happening in these bars, and it's going to help you see the change and keep you from taking that last long trade. And that's where 3 divergences really comes into play, guys. It's a small chart, the only small chart termination. So I'm going to ask again, is everybody pretty cool with what we're talking about so far? If price reaches an area, let's use that capture software again. What do you say? Let me take my picture and let's do it again. If price reaches an area and the triggers don't break, see how the triggers didn't make it? See how the triggers didn't make it? See how the triggers didn't make it? Where else? Triggers didn't make it. Triggers haven't cleared. Guys, the recipe never changes. If price reaches an area, oops, I can't spell, and the triggers remain above support or below resistance, that area may stop the market. Rule 2, not met. No clear path. Guys, can you give me a Y in the room, please, if you're with me on this? This is the same picture where we define strength in a move. This is the same picture where we defined weakness in those trigger lines. This is the exact same picture where now we're defining termination conditions. And look at this, when the small and the large get below the area, it becomes a clear path. So let's go ahead and use that one too. Small and large clear the trouble. It's a clear path. Pretty cool, right? One picture, guys, one picture giving you every lesson that you could ever hope for to be able to figure out whether or not it's time to look for an entry. So let's go back to the spreadsheet and we'll put this one in and we'll call it lots of termination conditions. And then we'll put the same picture, whoops, what did I do? We'll put the same picture in the clear path. And guys, I'm putting these into my spreadsheet for a reason. I'm teaching you to study right now. I'm teaching you to go back and recognize advantages when the market isn't moving. So let's do this. Let's go to the live market. Do I have odds favorable momentum? The background is green. The large triggers are green, but the small triggers are red. No. How easy is that? So Jeffrey Dean, do you see why I don't have odds favorable momentum? Algo, Jonathan, Iron Mike, Cav, Don, Adriana, Ty, John, Claire, everybody. That's not my best look, is it? Awesome. That's how quickly you'll understand. Do I have a clear path? What do you guys think? Paul Flowers says no. What do you guys think? Is the path clear? Not yet. So what does that mean? That means that I am void of momentum and I'm void of a clear path. And guys, who cares what the small chart says? Who cares what the small chart looks like? I don't have momentum and I don't have a clear path. But here's the cool thing, is when I do have momentum, when I do have a clear path, the one thing that I know without question is that the people in charge want it to go up. They want it to go up fast, and there's nothing in their way. Guys, the large crowd is your large chart. The large crowd defines direction, momentum, and areas. There is a small crowd. There's always a small crowd. Guys, we are even smaller than the small crowd. We are insignificant in terms of moving the market. But there's always a small crowd that says, hey, you know what? Let's fight them. Let's fight the large crowd. They say up, let's say down, right? And they've got just enough money from a rich uncle to give it a little shove. We're going to take advantage of the small chart's failure. We're going to take advantage of the small chart's inability to override the large chart, guys, and we're going to do it with that refinement process. When everything says down, when the momentum is strong, when the path is clear, remember when I said the best of the best to sell Fibonacci resistance? You guys won't be trading these tails. That's way too much movement. You guys are going to use rule number 3 to pinpoint exactly where that tail is most likely to form. And you're going to do it with such accuracy that you're going to use a limit order to buy or sell a pullback, that little shove by the small crowd. And you're going to buy or sell that pullback at an area inside of favorable large triggers. It says triggers. You're going to use a limit order to buy or sell an area inside of the triggers on the small chart, guys. I'm going to show you the best trigger look, and we're going to call it favorable large triggers. The areas on a small chart that I'm using are going to be fibs. Whether it's going to be support for a long, it'll be resistance for a short. We're going to use yellow 1-to-1s. Yellow 1-to-1s, they remain the same color no matter which way you're going. Or we're going to use the mid-band. If we're pulling back to the mid-band for a short trade, that mid-band is going to be magenta. If we're pulling back to that mid-band for a long trade, it's going to be green. It's going to behave as support. So we're going to do this, guys. We're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So let's define favorable large triggers. There's 2 large triggers on your large chart. One of them is the synthetic triggers, and they look kind of stepped. Synthetic is a fancy way of saying from a different time frame. So your synthetic triggers are the large triggers from the large chart. And then you've got the smooth ones, and those are the large triggers from the small chart. Price corrects to triggers, guys. Triggers are moving averages, and price corrects to the moving average. That's the easiest way to think about it. I wrote this up for you guys the other day. The large triggers are moving averages, and price typically returns to the average. So if both large chart and small chart large triggers overlap, you've consolidated 2 separate correction points into one concise area. This is called favorable large triggers. Does that make sense, everybody? When the large chart large trigger and the small chart large trigger are one on top of the other, you have what we call favorable large triggers. This is the best of the best, guys. This is when you're going to have the least amount of risk. This is when there's the least amount of space to put a fib, a midband, a yellow 1-to-1. When those trigger lines begin to spread, when they begin to splay, we're going to call those split triggers, and I want you to see. When those triggers begin to split, you've doubled the correction point. You still have to have an area inside of them, so at least you've got a fighting chance with these split triggers by looking for the area. But when these things break apart, look on your large chart. There's one correction point, there's one correction point. It really creates a lot of indecision. It's going to increase your risk dramatically. It's going to make it harder to pinpoint precisely where the market is most likely to continue. So for you brand new users, as you learn to read your indicator, I want you to embrace the idea. That favorable large triggers create an advantage. And John C., I'm going to address that. Are you going to be here for a minute? Next 5. John C. It was right for Mike. How's that for just kind of a blanket answer? It was right for Mike. And this happens a lot, John. And let me just see. Was it a high probability trend trade? It wasn't. Why not? Because we didn't get a pullback to areas inside of favorable large triggers. But it doesn't mean that it was wrong, John. If it doesn't fit your plan, then it wasn't your trade. But what you're going to find is that the more time you spend reading indicators, the more time you spend recognizing patterns, the more time you sit in front of the market, take pictures, ask questions, the more opportunities you're going to find. So one of the biggest things that new users will do is, as you're focusing on the high probability trend trade, guys, there's this little part in the back of our brain that doesn't like seeing the rules not met, if that makes sense. There's this little piece of your brain that's like, wait a minute, that wasn't a pullback to areas inside of favorable large triggers. Hold on, there wasn't separation between the small and the large. And what happens, John C., is once you understand the basics, once you give yourself a plan capable of winning more than it loses, during that process, you're going to begin to recognize other advantages. You're going to recognize that with this giant clear path and those dashed lines, that all we are is we're in a big, strong trending market. And then Iron Mike says, in a strong trending market with nothing in the way, when I get this little push down, I'll wait for it to start to go back up, and I'll just hop in and I'll try to make a couple $100 here. I'll try to make a quick profits taking advantage of a strong trending market. It's just a different style trade. But it's not a high probability trend trade. If Iron Mike came to me and said, Mark, look at my high probability trend trade, well, then I would just have him in tears on the floor, right? Because he didn't follow rules. Not really. He's Iron Mike. He doesn't cry. He has people to do that for him. So when you focus on the best of the best first, you're going to find so many more opportunities, guys. And that's exactly what Iron Mike just showed us. Being able to take recognition and turn it into capital. And that's all we're doing. But it starts with the recognition, guys. So when the large chart rules are met, I'm not trading tails. I'm trading pullbacks to support inside of favorable large triggers. I can circle this tail historically and see if it lines up to let me know whether or not the rules were met for a trade. And John C., did that make sense? So how do we pinpoint where the market is most likely to continue? And this is where I'm going to go after Iron Mike a little bit too. Not really. I'm not going to go after him, but you'll see how his trade isn't high probability at all when we talk about the whole lesson here. So the large chart, and this is it right here, says up, right? The large chart says odds favorable momentum. I know this because I would never look for an entry if it didn't. And the large chart has a clear path. And this has to be true for the high probability trend trade. Because if it isn't, well, then I don't have a trade. And when everything is screaming up, guys, I'm going to wait for a reversal bar. I'm going to wait for a reversal bar on the large chart. And this reversal bar is not my entry. This is the beginning of the pullback. And the pullback is that little fight from the small crowd. So at the time of the pullback, if I know that price corrects to large triggers, guys, if I know that price is likely to come back to these trigger lines, I'm going to put a box around my trigger lines from the lowest line to the highest line. I don't care if it is synthetic above large. I don't care if it's large above synthetic. I have two correction points overlapping, one on top of the other. This is where the market's likely to push back to. But this doesn't give me the advantage, guys. So when price reaches these triggers, I'm not jumping into the market. This is not my entry. This is the beginning of the correction. The best advantage, the biggest advantage, the most solid advantage comes from giving the market something to bounce off of. And this is why we use the language. Areas inside of favorable large triggers. So I let price come to the correction point, but I don't enter. But what I will do is say with something solid to bounce off of. This is like a wall and price is like a tennis ball. With this solid area to bounce off of, I'm going to activate a limit order just at the top of that window, guys. And this becomes my entry, right at the highest point of support inside of favorable large triggers. This is where my advantage is. This is where the market is most likely to continue, in between the lowest point of support and the highest point of support. This blue box is the precision of entry that Nexgen offers. I'm going to put a limit order at the top of that window because the large chart says strength and the large chart says clear path. Does that make sense, everybody? Whether the market is going up or down. If it's going down, I still wait for the reversal bar. That's not my entry. That's the signal of the beginning of a pullback. I'm going to find my trigger lines. The trigger lines are not my entry. They're where I expect those price bars to go to. It's the areas inside a favorable large trigger. So Pete, embrace the language. Areas inside of favorable large triggers. The areas can be fibs. It can be a mid-band. It can also be yellow 1-to-1s. And I don't care which one it is. I need something to bounce off of. So in this case, it's the mid-band is the only line inside of favorable large triggers, guys. I have one area where I expect that market to continue. My limit order goes just a skosh below, a tick or two below. Guys, these mid-bands will continue down as price comes up. Make sure you keep it a tick or two below. But Pete, on this one, I had both a mid-band and yellow 1-to-1s. Because the mid-band was the highest form of support, that's where my order went. And I think if we back up a little bit, I had mid-band, I had fibs, and I had yellow 1-to-1s. Guys, the more areas I have in the same area, the happier I am. But yeah, in this case, it was the mid-band, right? In this one, the highest point was the mid-band. In this one, the only point was a mid-band. But guys, the cool thing is, if you take 20 days to learn where the market is most likely to continue. Here we go, Pete. I knew I had one. This one, the lowest point was resistance. My order goes 2 ticks below that resistance, that fib line, not the mid-band. Don't get married to the mid-band. Use the language areas inside a favorable large trigger. So I know where the lowest point is. I know where the highest point is. This is where the market is most likely to continue. And guys, it doesn't change. This is straight from the spreadsheet. You guys have this if you have my spreadsheet. Everything begins with the rules being met, and when they're met, I wait for the reversal bar. This is not my entry. Once I get the reversal bar, I identify my triggers from the lowest line of the triggers to the highest line of the triggers. And I create this big box. Guys, that's freaking huge. That's not precise. This is where I expect price bars to return to. So I'm going to refine that big area by saying, where is my lowest point of resistance? It's a fib. Where's my highest point of resistance? It's a mid-band. So this box represents where the market is most likely to continue. This is my window of opportunity. This is where I expect the market to bounce. My job is to activate a limit order just below that window of opportunity, a tick or two below that lowest point of resistance. Because this chart is screaming to the downside with absolutely nothing in the way. Are you guys following me on this? And right here, I've done all I can do. I've given myself the advantage of momentum. I've given myself the advantage of a clear path. I've identified where the market is most likely to continue. I've activated my limit order, and now I'm on bended knee, hoping the small crowd has it in them to get back to my order. And if they do, if the small crowd has it in them to give me that push, guys, I'm in a short trade. I'm in a short trade with the advantage of momentum, a clear path in an area inside of favorable large triggers. And this is a trade that typically wins 70 to 80% of the time. And guys, this is a trade. What blue support line? Down here? Jonathan? That blue support line that price did not reach? Watch how I go all Sunday school answer on you here. And guys, this is why language is important. My recipe for this line to even make me think twice begins with the idea that price reaches it. Why? That's where decisions are made. So, Jonathan, have you ever been in the McDonald's drive-thru and started ordering your meal 3 cars back before you got to the speaker? Never, right? You're not sharing your decisions until you reach the area where decisions are made. And that's the beauty of the language that goes with termination conditions. It's a target. Amen. It's 3 blocks away. And guys, that's the cool thing, right? Because Jonathan, it's only what? 5 ticks away. Brand new users are saying, oh shit, it's 5 ticks away. Pardon my French, guys. It's 5 ticks away. That seems a little scary. And then they remember. Then they remember that I'm going to buy a pullback at an area inside of favorable large triggers. That red line is suddenly 27 ticks away. And guys, this is where precision, this is where patience yields results. Because by buying or selling a pullback, you increase the distance to your target. By buying or selling a pullback, you give yourself the absolute least amount of risk. And once you know where the market is likely to continue, ladies and gentlemen, you also understand very clearly where the market shouldn't go. It shouldn't go 4 to 5 ticks beyond that correction point. That's where your first stop is going to be placed, guys. Your first protective stop will be 4 or 5 ticks above those trigger lines, outside of the window of opportunity, at that point where the market shouldn't go. And 20 to 30% of the time, guys, that small crowd is going to plow into your stop. Every 2 to 3 trades out of 10, guys, that small crowd is going to take you out of the market. You're going to lose money. And here's the deal. You've got to learn to be okay with that. You've got to learn to be okay that small losses are a normal part of a positive equity curve. You've got to do the study and build the trust that when you have these advantages, it's a trade that wins more than it loses. It's a statistical advantage. You have to believe wholeheartedly that this is your recipe for success. And that doesn't happen just because I tell you that it's true, guys. You don't build trust because Mark Novak told you that this works. You build trust by going back and testing it, by practicing it, by annotating your charts, by making sure that it's doing what it needs to do. And I'm going to show you how to study it, guys. I'm going to show you exactly how to study it. So let's go to the market real quick. And let's go to one of those potential to break tails, just because it's the first one that I see. And I'm going to go, whoops, and I'm going to scroll back on my small chart, and I want to see what that tail looks like. That one's not rules met. That wasn't an area inside of favorable large triggers. Guess what? That wasn't my trade. So I'm going to scroll back even more. And I'm going to look for all of that momentum in either broken or potential to break. And I'm going to circle that tail. Whoops. And I'm going to scroll too fast. And I'm going to say, well, that one pulled right back to resistance inside of a trigger. They were split, but that was a pretty good look. And I'm going to scroll back again, and here I have momentum and the potential to break, and let's see where that one pulls back to. Not my area. That was 3 divergences in the same price range, and it pushed that market down kind of ugly, and then it continued up. And then once it continued up, it might have given me an opportunity. But guys, this is how you're going to study. We don't trade tails, guys. We don't ever trade tails. We trade advantages. We trade areas inside of favorable large triggers. But here's the cool thing. If you go back and circle tails, do it on any market, guys. Go back and circle tails. I'm pulling up my picture right now for you. If it lines up with areas inside of favorable large triggers, guys, you have the rules met. You have that look that you need to put into your spreadsheet so that you can build the plan. as you develop trust in the look, guys, as you learn to catch this look, go back to client trades. So let's see what a high probability trend trade long looks like. It looks like odds favorable momentum. It looks like a clear path, and it looks like a pullback right to a mid band, right inside of those triggers, and rode that momentum all the way up to resistance. And then, guys, here's the other part of the magic. Does everybody see that big red fib? Does everybody see the smalls returning to the large? That's a pretty cool target, right? Guys, I'm telling you right now, you're going to take trades from 72.75 and you're going to exit at 78, and you're going to look like a badass because you knew exactly where the market was likely to go, and you abandoned hope and wish and want, and you exited right at the termination condition, and you didn't have to give anything back. And guys, that feels good. So what does the short look like? It looks exactly the same, doesn't it? Looks exactly the same. So if you try to learn to trade by only taking trades, you're doing yourself a disservice. Go back and study these. Go back and circle tails, guys, and give yourself a plan. You gotta have a plan. So I'm gonna do 2 things for you. Actually, I'm gonna do like 12 things for you right now. This is Chart Reading 101, guys. This is how you're gonna get good at it. This is what we did with those strong triggers. This is what we did with those weak triggers. This is what we did with that termination condition. This is what we did with that clear path. And it only took one picture to get all this information, guys. To get to where you want to be, you've got to recognize those individual pieces, and you've got to be able to do it at a moment's notice. The faster you recognize your advantages, the quicker you're going to be on the draw, getting your entries in the right spot. So take all of these pictures. It's about 245 pictures. And don't just take them. Talk about why it's strong, why it's weak, what's the advantage, what rule does it go to. Get in the habit of associating language with looks. Get in the habit of not looking for trades, but rather looking for advantages. And then when the advantages are present, you're obligated to take the trade because that's what your plan says. So I'm going to give you guys the Chart Reading 101. And I'm also going to give you the KISS plan, guys. And the KISS plan, you have to know why you're getting in. And John C., this goes back to, it wasn't a high probability trend trade, but it was Mike's trade, right? Mike has a plan to take that trade based on the patterns that he's seen. In the beginning, this is a stepping stone in your learning journey. This is what teaches you to become a chart reader. This is what teaches you to be in a position to recognize those other patterns. And this is designed to optimize your chances of success with a high probability trend trade, guys. And if you're not following these rules to get in, it's not a high probability trend trade. You forfeit the advantage of something that wins 70 to 80%. So this one is going to give you the best of the best, guys. And then it's going to be simulation, study, class feedback, and continuous practice. Here comes the AI generated phrase. You will be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, as soon as you're a chart reader, you're going to see more opportunities. But here's the deal. Your read is not rules. Your read is going to have you saying things like, I think it might go up from here. Your chart read is going to say, hey, the market might retrace to here. So embrace the rules, guys. The rules are what gets you into the market, not the rules, your rules. So in the beginning, your rules are for the high probability trend trade. And as you grow, your rules may be momentum trades. Your rules may be jump-in trades. Your rules may be HVA trades. But you have to know what you're getting into so you know how to manage it. So your simple plan for consistency, guys, don't fight the large chart. And I was picture happy yesterday. I'm going to show you guys some more of the stuff that I took yesterday. The large chart's at a termination condition. The small chart looks like a perfect entry. The large chart doesn't have odds favorable momentum. The small chart's a perfect entry. Guys, if you took the perfect entry and fought the large chart, you got whipped. You lost money. You're angry. You're starting to question things. If you don't post this picture in the room and we don't have a conversation about termination conditions, you're going to say, because of this entry right here, because you did take a pullback to support inside of favorable large triggers, that trade sucks, that the market sucks, that the methodology sucks, that Mark sucks. But if you back up and you look at the big picture and you let the large chart lead the way and you write out your rules on the chart, then you realize that you traded directly into an area that was likely to stop the market. And that area likely to stop the market is part of a pattern that's been repeating itself year after year after year after year. So learn the patterns, right? Study the rules. Don't get sucked into the small chart. And what happens is you start to find that success you're looking for. And everything starts with defining your entry, guys. Great entries create manageable trades. High probability trend trade entries create the least amount of risk. High probability trend trade entries create the largest room for profits. And once you're in this trade, once you learn how to get into this trade, guys, it's terrifying because now you have to do something with it. So your management plan should be just as mechanical as your entries. Your management plan should be 100% dependent on having all of your advantages met on the large chart before you ever take the trade, and 100% dependent on you getting into the market where the market is most likely to continue. So don't forego the high probability trend trade. Don't try to get to the money before you learn the process. If you're in where the market is most likely to continue, you know where the market shouldn't go. That's your first stop, and it's either going to get hit or with all of those advantages, it's going to give you a reversal bar in the direction of the trade. With that odds favorable momentum, with that place to bounce, with that correction point, with that clear path, more often than not, you're going to get a reversal bar in the direction of the trade. Your new stop, if I enter where the market is most likely to continue and it doesn't hit my stop, then I will put my stop 2 ticks above a reversal bar. Or in a long trade, 2 ticks below a reversal bar. And now there's absolutely nothing for me to do. Once again, either my stop gets hit or I hit my first target. And guys, this mechanical approach to management for new users, let it be this pragmatic in the beginning. Let it be this opinionless in the beginning. What's going to happen is you're going to start to learn how to hold these trades instead of jumping ship too soon. If you don't get stopped out, it's probably going to hit your first target. And the first target's only $100 in the distance, guys. We're trading 2 contracts. The first one is off at $100. You're paid, you're confident, you're happy, there's money. Guys, $100 trades add up. And you're also going to move your stop to break even because you're learning to trust the idea that the large chart is why you're in this trade anyway. That with all this momentum and a clear path, it's going to be hard to stop that freight train. So you're break even, you're $100 richer, you feel great about the world, and if it hits your second target, you're going to exit. And here's the deal. You're going to exit, and you're probably going to exit before that move is over. You're probably going to feel like you missed a lot of money. You're probably going to feel like the market owes you something, but here's the reality, guys, is this is logical. This is a $300 trade, ladies and gentlemen. This is one trade, the most conservative, advantage-laden trade you can take. This is the most conservative, opinionless, emotionless management you can use. If this is the best you do, every day it's $1,500 a day, or $1,500 a week. It's $600 a month, and it's around that $72,000 a year point. And guys, this is from a plan that is the most simple, basic, teach you to read your indicator plan that you've ever had in your life. Focus on the process that yields results first. Don't worry about individual wins. Don't worry about one trade. Focus on the big picture. There you go. Go spend that kid's inheritance. And if that inheritance is big enough, I am up for adoption. Just saying. So guys, keep it easy in the beginning. Study lots. Go back and look at pictures. Create pictures. Ask questions. Be totally comfortable losing trades. Be excited about wins. Be excited about step forwards. But keep it simple in the beginning. The less you look for, the easier it is to find it. So I'm also going to give you the high probability trend trade checklist, guys. Never had anybody in the history of this checklist do worse than 70%. This is the one that you print out. You put it on your desktop. We've already established that purple is the most delicious crayon. So make sure you can check yes on each and every one of these with that delicious crayon. And then as you're just learning, as you're taking pictures, as you're getting used to these looks, guys, this is a termination that absolutely no trigger lines broke through, and it reversed the market. Guys, this is what we call a strong bottom, and a strong bottom is the precursor for the highest probability trend trade that you can take. Note, you can still take them without a strong bottom, but they become even more likely to win with that strong bottom. This is the advantage of momentum. This is what it looks like when it's gone. There should never be any question in your brain if you're taking these pictures. There's your termination. There's your clear path. Once again, it should never be up for discussion. It should be very black and white. There's your window of opportunity for a short. Reversal bar, find your triggers, identify your areas, get that limit order in place. Same thing with the long. So guys, I'm going to give you all of these right now. I'm going to give you the chart reading 101. I'm going to give you the high probability trend trade with pictures. I'm going to give you the printable. I'm going to give you the KISS plan for the high probability trend trade, as well as a 50-50 trade with the potential to break. I'm also going to once again give you my spreadsheet. Steal it. Use it. Look at it. Embrace it. And I'm going to give you the PowerPoint that I used to teach the classroom, guys. So I've given you every tool that I have to get you where you need to be. The only thing you need to do is practice and post in the room. Practice and post in the room. Every day, rinse and repeat. Morgan, staying on sim until you understand that your laptop is trustworthy. Morgan, I stay on sim until I'm sure that my plan is trustworthy. I have a little different approach. I stay on sim until I'm positive that I can follow my rules. I stay on sim until I'm sure that I can win more than I lose. I stay on sim until I guarantee myself that I can win. That's just me. Simulator is monopoly, guys. I'm learning to be a real estate mogul, but I'm doing it with pretend money first. You take as long as you need, Jonathan. So guys, that's my first hour every hour. Do I have odds favorable momentum on crude oil here, guys? What do you think? New users, help me out. Do I have odds favorable? Yeah. Do I have a clear path? Not yet. Morgan, if you took this trade, you took a momentum trade. Beautiful. Morgan already took it. He already had his loss of momentum. That loss of momentum may pull me right back to support right inside of triggers. If it happens before I hit this red line, I'm in. It is 50-50. Without a doubt it is, Jen. It's 5-50-50, which means that it's not a clear path, which means that it's a medium probability trade. Absolutely, Morgan. And Morgan, did you take it right here? Morgan, if you're not proud of yourself right now, I want you to allow me to be proud of you. So guys, what Morgan took is with this momentum, with the small triggers through, he says this area has the potential to break. When the small triggers break through on the small chart, buying a snapback to that fib. No, Mike. Terminations happen on the large chart, brother. I'm hoping that those 1-to-1s give me a push back to an area of support inside of favorable large triggers. I'm kind of rooting for the 1-to-1s to create a little bounce. Now, divergence might kill me. Oh, hold it. On the 13-2, these 1-to-1s up here? Sorry, I misread your question. Why? Hold on. Where's price? Price is at $74.81. I'd like a cheeseburger and fries and a Coke Zero, please. To which these one-to-ones are replying, dude, you're so far away, I can't hear you. Let's talk when you get here. There's my horrible analogy. If price doesn't reach it, Iron Mike, it's just a target, man. That's it. It's just a target. Because my recipe for terminations is that price reaches the area and the triggers remain above. And man, these used to scare the hell out of me, Mike. Well, I don't have room anymore. I don't have room to get there. How can I get there? How can I make any money this close to those yellow one-to-ones, right? Mike, you get a gold star today for bringing this up. Let me pull this one up real quick. There's my distance. No, there's my distance at the most current bar when I start waiting for a pullback, Mike. Look at how far it is if I trade a pullback. Now, if I just jump in, I'm fooked. But if I wait for a pullback to support inside of favorable large triggers, that 5 ticks just grew to 27. That $50 just turned into 270. Does that make sense? So this is where I get real kind of OCD about language. If price doesn't reach an area, that area is a target. Now, Mike, now those one-to-ones are problematic. Now I've reached the area and the trigger lines didn't break. Pretty cool, right? Guys, when I say language is important, I'm annoying. I know that. But if you really start to embrace the idea that there's words that tell you whether or not it's a problem. That's the correct spelling, absolutely, Rob. Decisions are made, ladies and gentlemen, at key areas. If we don't reach that key area, well then why on earth would they start making decisions, right? Pictures like this, guys, absolutely floor me. If you're not like a firm believer in Fibonacci yet, look at how effective it can be. All you have to do is learn a couple little tricks to finding the advantages in between those areas. It's awesome. So guys, I'm going to leave you with this for a second. I'm going to take a break. I'm going to go stretch my legs. When I come back, we are going to talk extensively about everything that you guys have done. I'm going to go. I got to grab some water. I've had my coffee, Mike. Of course, you're 3 hours behind me, so coffee seems appropriate for you. When I come back, guys, we're going to talk about everybody's charts in terms of advantages. If you didn't annotate your chart, if you didn't tell me why, I'm going to tell you why I think. I don't want to have a big discussion with you via text because you chose not. Oh, you're Eastern. I don't know why I thought you were in California. Well, it's too late for coffee. You are already at Bloody Mary time, Mike. You're in Cali, Parker. All right. So check it out, guys. Look at that bounce off of terms. So when we come back, here's what's going to happen. I'm going to talk about advantages. I'm going to talk about advantages whether it's a high probability trend trade, a momentum trade. I'm going to talk about advantages whether it is this or that or these or those. It doesn't matter to me. We're going to find a way to do it better if there is one, and if there's not, we're going to virtual high five. So guys, go stretch your legs. I'll see you in 5. Um, that was a short break, right? Short breaks are good. It says right. Then Malcolm, jump in with Jason and Tech and see if he can help you out. Sorry. My tech stuff is so limited. I was so excited I thought we had one for you there. You may need to rebuild data or reload, or I would get with Jason, let him take a look at it, see if he can help you. Sorry I wasn't more helpful. I am truly the worst tech guy ever. But I'm getting better, slowly but surely. So guys, I'm going to scroll up to the top, and we're going to start looking at what you guys did. But man, look at those cuties. I do love puppies. See if I can get there. Holy smokes. A lot of conversations in the room. I'm going to try and get to where we are. All right, I'm going to scroll back to yesterday evening. So, Jonathan, you've got a few. I'm going to open up like several of yours, and then we're just going to go through and talk about them. And that'll get us back up to the most current day. So, guys, one of the things that I have to do is I have to scroll from bottom to top like this. And when I do that, I'm going to look at a couple pictures, and then we're going to come back and we're going to talk about it, and then we'll be good. You reload your templates and everything just to be safe, Parker? I like that. All right, so Jonathan, for the first one, you had the momentum. Everything was up. It looked great. I love it. What a great looking trade. Do you see how this entry is early? It wasn't a mid-band. And then this one came back and you absolutely nailed it. Beautiful. Early entry, but because you're beginning to understand where the market should bounce, where it should continue, you're able to stay in that trade and get paid. And then you get back into the market, and I don't understand why you got out so early. And you mentioned divergence, right? So Jonathan, one of the things is if you have a high probability trend trade, if you've got the best of the best look, if you've got that look that is so full of advantages, when you have momentum, when you have a clear path, Jonathan, there is one time that I'm going to let the small chart scare me out of it, and not even scare me out of it. There's going to be one time where the small chart says, hey, Jonathan, let's cut ties with this one. Let's jump ship, especially for a brand new user. And that's where we come into the three divergences. I know you know, but do you think you should have stayed in because of what happened next? Or do you think you should have stayed in because of rules? So I go back to rules, where I just say three divergences is what it takes to get me out. And then it was a screamer, without a doubt. And then I took a picture this morning of your picture, Jonathan. And this is something that I've been working on a lot. Is once you're up here, have a good one, Mr. Flowers. If you need feedback, please feel free to DM me if you got to run. So Jonathan, when I look at it, that's your fear exit, right? But once you get above that challenge, you never get any reason to exit. And it really never gives you any reason to exit all the way. And then I took this picture too. Guys, this is the range right here. This is the terrifying range, that little indecision range where new users tend to jump out early. And I think all of us can say absolutely. I've done it. I've let fluctuations on the small chart take me out. And this is one of the reasons why every day, guys, I talk so much on having a reason to get in and being very, very precise, following the language, following the rules, trying not to deviate. Because what happens if you're in that KISS plan, Jonathan, if you're trading that super basic, no room for opinion KISS plan, you you made 300, but then you have the opportunity, because you're building trust to get through the nonsense, right? You're building trust to get through the nonsense, and eventually you hold for that bigger move. So great stuff. And then 354, we were here, had a soft bottom. I don't know what a soft bottom is. Well, I mean, I do, but that's my private life. I either have a strong bottom or a weak bottom. I either have a strong top or a weak top. It's either a no triggers through termination that reverses the market. Jonathan, this is strength, strength, strength. That's one of the biggest reasons that market made it up to the next area, because of this strong bottom. But a small pullback due to favorable triggers on both charts. Clear the one-to-one on small. Admit that I'm not sure what to do and why with the magenta line. Perhaps you'll let me know. I can see it represents Andy. Represents the hard top on the last green run termination point. This is fun, way better than TV. I love it. So what happens where you circle, Jonathan, is here we have a termination. Here it reverses. Here you're on the good side of momentum. And there's really not opportunities here unless you just jump in, which isn't always the best opportunity, especially right into one-to-ones. Right here where the small triggers break and pull back, there's a potential momentum trade, but it dies out pretty quick. And then, Jonathan, here's your trend trade. Two divergences with odds favorable and a clear path. And this is kind of what we do in the beginning. We start looking for every opportunity. But if you sit tight and you wait for the best opportunity, it's easy. If you just find the patience to wait for the best opportunity, it becomes easy. And that's kind of what we're doing here. Termination reverses the market, odds favorable momentum, perfect pullback, right to support inside of favorable one-to-ones, and it's easy. So let's see what your annotation was. Hard bottom. Hard bottom, strong bottom again. Strong triggers. Out at trouble fast. So you took a jump in trade and got out at trouble. I love it. And then, Jonathan, every time you jump in and it fails, if the large chart says we're still going up, it probably turns into a trend trade. I may, knowing me, have gotten out at first trouble. If not, further up, gotten back. However, lost momentum. Large chart turning down. So I like it. Getting out is cool. But do you see the trend trade? Jonathan, that's what I want to know. Do you see the trend trade? Can you guys hear me? So, Jonathan, do you have momentum? Right here. Let's follow my lead here. Do I have momentum? Yes. Very simply, yes. I have the potential to break because of the momentum, right? Smalls and large, everything's up, tons of momentum. I'm looking for an entry. Area inside of favorable large triggers. Guys, what I need you to believe, and I want to show you something. No reason to get out of this trade. Absolutely no reason to get out of this trade until maybe divergence prints up here. Does that make sense, Jonathan? Everybody in the room, does that make sense? Strong triggers, potential to break, perfect entry, let's get paid. So this is what the new brain does. And I'm not knocking it all, Jonathan, and I'm not doing anything other than seeing me 6 months ago. You start doing this. Look at these, look at that. What about this? What does this mean? Is that there? What about these? Holy shit, I can't find a trade. Right? Has anyone other than me done this? And then when you come back and look at it, you're like, ah, son of a bitch. That's the best of the best. Why am I looking for so many things when all I have to do is wait for the best thing? Jonathan, everything about your charts is cool, right? But you're working so hard looking for all the moves. Find the best moves. You're new. Find the best moves. And then what happens, Jonathan, is when you start taking this one and making money, maybe you add contracts in to those best moves. And guys, that's kind of why I focus on simplicity in the beginning, because you're going to confuse the hell out of yourself looking for everything. This live trend trade brewing, soft top, but triggers possibly coming in on the large. Small's a mess, right? You see the momentum, but there's no entry yet. So you have to be patient. Jonathan, great charts, man. Thank you so much for sharing those. You are so on your way. But guys, great entries create manageable trades. Jumping in has to be managed aggressively. Jumping into trades has got to be managed aggressively. And if you're brand new, you probably don't have the chops yet to manage aggressively. All right, let me see where we're at here. So many pictures. So Jen, we've got yours, right? I'm going to do two things. I'm going to open yours, and then I'm going to open my response to yours. And then I'm going to open John Novak's picture from yesterday. So me. All right. So termination condition reverses the market, gives odds favorable momentum. And Jen, you're looking for that momentum trade, right? Because you heard about it yesterday and it's cool and you caught it and you can't wait to trade it. And you're like, heck yeah, have you met me? I'm a momentum trader now. I spent a day on it. You had the right idea, and everything begins with the momentum here, right? Everything begins with the momentum here. So what these momentum trades are, Jen, is these are trading the potential for an area to break. That's all it is. You're trading the potential breakout. And that best of the best, I don't know where you got in. You don't have indicators on here. Your blue arrow suggests that you traded directly in to the area because the smalls didn't break until all the way over here. Does that make sense? So looking at your chart, it's a little confusing on where you entered. Well, your blue arrow stops right here with the small triggers above the area. Your blue arrow stops trading into the area. The smalls don't break through until over here. So when the smalls broke through over here, you sold. Is that right? All right. So what you did is you kind of mistaked the lesson. So what you have really is just a jump-in trade, hoping momentum carries you. Can we agree to that? This is your momentum trade. Breaks through, snaps back, you've got this solid line that you're trading from. This is letting it clear and jumping in. And I'm not opposed to this trade at all. I think this is a very effective trade. But what's your exit condition if you just jump in? Is it a loss of momentum or is it reaching the area? You let it reach the area. And I love that. Why did you do that? Because your large chart was screaming down. But the only thing that I ask, Jen, is when this retracement started right here, when you got that reversal bar, was your stop where the market shouldn't go? How are you determining risk? Because if you jump in due to momentum, how are you establishing your risk? Are you still way up here behind the fib? And again, I'm not beating up your trade at all. I want you to be thinking about management because management's the second part. And the better the entry, the easier the management. Your eyes were everywhere. Right on. Adrenaline's fun, isn't it? So if I'm right behind the fib, then I'm right at areas, right at triggers, right? And that's a trend trade. So one of the things that I encourage you guys to do, if you're going to take a trade, right? Know what your trade is. Know what you're in. So the triggers get beyond. Buy the snapback at the area. Get in right at the area. And Jen, you'll literally have maybe 4 or 5 ticks risk at the most. And then carry that thing all the way until you lose momentum. That's how momentum trades are taken, guys. Momentum in, momentum out. By trading from the area, what it does is it establishes risk and it makes it easier to manage. Does that make sense, Jen? I think you're off to a great start with practice because you're taking the elements and you're incorporating them. And what you've done is you've taken this jump in scenario with trend trade management, which is okay as long as your stops are in the right spot. There's nothing more frustrating than getting into the market and getting stopped out right in an area it triggers. I know because I've done it a lot. So great job. Let this be your template for what you're looking for on those momentum style trades. Hey, no worries, Andy. I hope you have an awesome afternoon. You're welcome, Jen. I love this. This is fun for me. I hope you guys realize that. I look forward to class every morning. This doesn't feel like going to work. This is like hanging out with my buddies, helping them get to a better place in life. I'm a very fortunate soul. All right, let me see what's next. A lot of pictures. I like pictures. All right, Paul, we got one for you. Paul says, with all of this momentum, I'm going to trade into a termination condition, and it didn't work. That's the easiest one on this one. And guys, in the moment with the adrenaline, you're going to believe that's a 50-50 trade. You're going to believe that had the potential to break. And this is why going back with a calm head pays dividends. Paul went back and said, oh man, I traded into a termination condition. The fib said not to enter the long. And sometimes you've got to make these mistakes, guys. You've got to make these mistakes so that you can come back and know what the challenges are. And Andy just walked out. But guys, there's no such thing as a pretty good top. It's either a good top, it's either a strong top or it's a weak top. It's either a strong bottom or it's a weak bottom. And then Andy took one of those momentum style trades. Small triggers break through, snap back to the area, perfect entry, out at trouble. It's not $1 million trade. It's a quick hit. It's just living off of momentum in the moment. Cav does the exact same thing. Potential to break directly into a termination condition. 100%, guys. He takes a shot. He manages aggressively. Directly into one-to-ones with absolutely no triggers through from a bad top. You've got to pay attention to these things because it sets your brain right for aggressive management. And Cav did it great. If you're going to take a shot, it's not a home run, right? And then when it breaks, he takes the exact same trade and makes money again. I love it. The exact same trade. Smalls break, snap back, giddy up. Smalls break, snap back, giddy up. Cav, rock star, brother. Nice job. It's good to see you back in class. Good to see you back in class. Guys, I'm going to go through a few pictures before I scroll back down just so that I can get through some of this stuff. Possible trade this AM. Strong top. Momentum triggers. Great on large. 4 entries possible on small. So what are your entries, Jonathan? All of these are jumping in, right? Beats bartending? I don't know. I liked bartending. Jonathan, the only thing that I want you to realize on this, and I want to show you what it was, is you're mistaking these little blips. These little blips. You're mistaking those for pullbacks. That is a 2-tick fluctuation in price. That's all it is. And if you jump in, that's awesome. You hold forever, right? But these aren't, I don't teach any rules where these are entries. That's nothing more than just jumping into the market when everything says down. And the cool thing is, Jonathan, and everybody else in this room, is that this can pay huge dividends. With odds favorable momentum coming from a great termination, the market is absolutely screaming. I love this first one. You clear the area, you get in, and the market doesn't give you any reason to exit until all the way down here. Does that make sense? With everything screaming, it's just reliance on momentum. And Jonathan, if you got in on number one here, the market never even blinked, never even told you, hey, Jonathan, let's jump ship until you got to close on the wrong side of those triggers. I love this. This is a great read. I don't understand I don't have rules for the entry. These have to be the Jonathan Christoph rules, not the Mark Novak or the Nexgen rules, right? But I think you're onto something there. I'd go back and find a lot of pictures. Because I think there's some people that make a lot of money like that. I think there's some people that take that kind of trade and do really well with it, Jonathan. And if I'm not mistaken, I had a pretty good run with it this morning. Taking that exact same kind of, here's my momentum. And I even jumped ship early. I got out early because I had a class to teach. All right, GWC. GWC's been with us a while. So not a termination condition so much. What you have here, GWC, is just weak triggers. It didn't make it to the fib. Didn't make it to the fib, and it's far enough away. I'm not calling this a termination. This is just a pivot kind of in the middle of nowhere. But those weak triggers roll the small, and my expectation is up here. My expectation is to hit that mid band. You take the first shot, and then when it pulls back and closes the gap to the synthetics the way price does, you take your second shot, and you know exactly where trouble is. I think your first entry is a good shot when it doesn't work. I think your second entry is a great second shot, working off of those expectations. Nice job, GWC. Definitely not a high probability trend trade. In no way, shape, or form is that a high probability trend trade. That is recognizing patterns that repeat itself and finding a way to capitalize. So GWC, nice work. I get excited when I see you guys taking trades outside of the plan because you have so much experience looking at stuff. And then, no, it's not letting me open. Hold on. All right, guys, I got to do a quick little Control-Alt-Delete and reboot. I'll be back in 1 second. It won't bump you, but it's not letting me open pictures, so I have to come back and redo it. So give me just 1 second. I apologize. Education room, bring it out, get my pictures, show my charts, dun, 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 dun. Go live. Large chart, small chart, Cheetah, and then GWC adds in a range chart. I don't know. No, probably 13.2, 5.1, 8 range. So a 34.5, 13.2 would be NASDAQ. Yeah, this is just a basic, large chart, small chart. And then he's added in the range chart. But if you're not good at what you're doing on the small chart and the large chart combo, that range chart's just going to confuse the hell out of you guys. There's a lot going on there if you don't understand what you're already looking for. Jonathan, I think we found your trade, my friend. With odds favorable momentum, not a good bottom, weak triggers, strong triggers. You wait for everything to go green and get in on the left side of the small and carry it right up to fibs. Jonathan, I think we found your trade. Remember when I said we'd find your thing, guys? Jonathan, I think we just found your thing. You're a jump-in momentum trader. All right, Don. You say you're still working on the description of the trade. So we have a termination, creates a reversal, and then the small triggers kind of eke their way through. Don, are you in here with me? I know it's been a while since you posted this. Basically what we have is a 50-50 trade. 50% of your triggers are through and 50% are not, which means that this trade does have the potential to break, but you just don't have a clear path yet. It has the potential to break with all that momentum, but it's not broken. Don, does that make sense? Because that's the most important feature of this trade, is that you don't have a clear path yet. So when I don't have a clear path, one of the things I'll do is divergence is one of the biggest killers of this look. And one of the things that I talk about a lot is letting those small triggers absolutely smash through an area rather than just peek their heads. Your entry is appropriate just below the mid-band, inside of triggers, and it's just a failed trade. It's the potential to break and it didn't. That's all it is. You might have been able to have your stop a little tighter, I think, but it looks like you waited for the reversal bar and then put it right behind it. So, Don, nothing wrong with this trade. With a great top, with all that momentum, with the potential to break, with the rock star entry, you gave it every chance to break and it just didn't. People with more money than you had other plans. Good looking trade, guys. That's a 50-50 trade. It's not high probability, it's medium probability because the path isn't clear. But I think you did it about as well as it could have been done, Don. Jonathan, same jump in. All right, Jonathan, are you with me? And guys, this is for everybody because this is the best lesson that I can give you for you guys that want to jump into trades. If my small triggers are up, right? Jump in, jump out. Does that make sense? Small triggers are up. I'm on the left side, jump out. Jonathan, these were pretty easy and happened fast, weren't they? Watch this. You're about to see how the human brain works. So, Jonathan, shouldn't we have been jumping in the other direction with that look? Your brain is thinking longs. Your brain is thinking long, I just made money. Let me go long again. But look at the trigger lines, and this is huge, I think, because it takes a while and it takes repetition. Look at how effortless it was in the momentum phase there. Look at how effortless it was in the momentum phase. Do you see how, well, what did your large chart say? Your large chart said you're trading directly into a termination condition. How's that? Your large chart says, Jonathan, this sucks. That's a termination condition. So what's the challenge? I'm coming directly off a termination condition. And my small triggers are down and strong. And then, guys, this is one of the reasons why you have to understand why you're taking trades. So let's go through this, because I think that this is a good one, Jonathan. Why did you jump in? Because of momentum, right? And because you had room to your target? So you jumped in when everything was green. I like it. But here's kind of the, exactly. So here's the deal here. So when I don't have room to my target because I already hit it, and when I don't have momentum because, hell, my small triggers are red and my large triggers are red, it's not the same trade. And that's what you need to recognize. What does it look like on the small chart? It looks freaking amazing. Both charts agree without question. But on this one, I don't have any momentum on the small chart, so I can't use that. And I don't have room to my target because it's a termination condition. I can't use that. But then what happens is the termination creates this huge bounce all the way back to support, right? And then I get back into that momentum, and now I can capitalize once again on the look. Does that make sense, Jonathan? Because what happens is we learn to not take this one. And you learn to embrace this look, and then what happens is everything kind of works itself out. Great job, dude. And we found your trade. Because you're seeing it, you're nailing it, and now we just got to refine and weed out the ones that maybe aren't the best. And then just in case Paul checks us on YouTube, directly into a termination condition, right? He does take the pullback, takes a chance on it, it works out, and he gets out of the termination condition. I love it. Takes a chance into the termination because it closed the gap. He got the reaction, and then he gets in to get up. Nice job, Paul. And then Pete, let's see what you're doing, Pete. Hit fib resistance, divergence and triggers roll. Yeah, it did. Triggers widen down, blew through termination conditions. Let's build a little trust on momentum, right? Small triggers inside a large. There's my loss of momentum. Fib change from support to resistance. It did, but we're looking over here. Potential to break. Odds favorable. So, Pete, what you've kind of done here, and I see that there's not a trade, is you're identifying that momentum phase that is confirmed by the momentum. And these are your just get in with momentum trades, right? I think I posted the one that I took in the room. I think Jonathan saw one in there. It's a great opportunity to get paid in between trouble when there's nothing but momentum. Does that make sense, Pete? I don't teach this trade. I don't have rules for this trade. But I can look at a chart and see these advantages. You did a great job. Support. It blows through with momentum. There's your clear path. Weak triggers at support. They're able to screen past it a little bit. Yeah, you're doing a great job. Doing a great job. And that's it right there. Just keep identifying. Keep talking about what you see. And you'll keep seeing more. Iron Mike, we talked about yours, right? Taking advantage of a strong trending market. We talked about that one earlier. Miss Cindy says, when everything is down, it's coming from terminations. I get a pullback to resistance inside of favorable large triggers. I'm going to get paid. Hey, Cindy, I love your entry. Because what you've been showing me lately is getting in right there. Great patience. What a beautiful entry. And it helped you really capitalize on the move. Nicely done, Miss Cindy. That's the best entry that I've seen you take in a while. Really nicely done. And then Paul, everything says down, pull back to resistance, right at the triggers. And sure enough, you can make some money. And then that fib update got you. Oh, fib printed. And probably didn't get as much as you could have out of it. That's that fib update right at 10 a.m. And boy, that Fitbit update works because they knew exactly where that was. But divergence on a 50-50, you can choose to manage a little more aggressively on those. All right, Morgan, let's see what happens. You got two of them, so let's use both of them. Morgan's showing off now. All right, Jen. It's Morgan's chart, but I want you paying attention to this one. Odds favorable, great bottom, potential to break, small triggers break through, snap back to support, beautiful. So, Morgan, the only thing I have to say is that if this one fails, you still have an area inside of favorable large triggers, right? If this one fails, you still have an area inside of favorable large triggers. That's the only thing that I'm going to say about that one. And it didn't fail. And then you said, I don't have any reason to get out of this trade. I'm going to hold the other ones all the way up because now it's really just momentum. Let's get to areas. Morgan, this is freaking beautiful. What a great job you did on this one. So Jen, I want you to study his entry. That's the best of the best of the best on those momentum styles. And all it is anticipating the breakout. And if the breakout doesn't happen, look at you. I love it. I love it. Jen, you can be taught. Nicely done. You and Malcolm are in cahoots now. I see it. Split triggers, gap theory, areas. Jen says, I'm not taking a trade here. I don't hate money. I don't have momentum with flat triggers. I don't have a clear path with the gap theory. I refuse to take that trade. Andy says, with all this momentum and the pull back right to the areas, I bet I can get paid. And sure enough, you did. Doesn't have to be hard, does it? It just doesn't have to be hard. And then here's my... You good, Parker? Okay. Here's my brother just effing with me. Just jacking with me. Not really. So guys, I want you to see something. How things change as you change. Large chart says up. Large chart says momentum. Large chart says clear path. Small chart's not that pretty, is it? Do you guys see it? This is pretty ugly. That's 3 divergences. That's split triggers. Guys, I want you to tell me if you see exactly what I see. How on earth am I going to find an entry here when my rule number 3 isn't met? Guys, this is where patterns. We know that the large chart's likely to correct back to the large triggers. It did it here. If you didn't catch this trade, it did it again here. Reversal bar prints, that might have been an entry. And then when this divergence hit, you probably exited and you said, I'll wait for confirmation because the large chart still says up. And that's exactly what he did. Notice that he's in on the reversal bar and it allows him to capitalize. He had to sit through small chart nonsense and let the large chart lead the way to get him to the target. It's a beautiful trade. If you're a brand new user, you're going to struggle to find an entry here. If you're a brand new user, this doesn't make any sense at all. But once you start to watch that large chart a little bit and really trust what it offers you, you'll be amazed at what you come up with. Anything can happen triggers. Yeah, that's kind of ugly, isn't it? Just nothing to do there. Rob, that's a great picture. Gary, oh my gosh, you're killing me, Gary. 34.5 says into a termination. 21.3 says into a termination. 10.2 says into a termination. Into a termination. And now let's back it up. 34.5 had odds favorable momentum to get to that termination. 21.3 had odds favorable momentum to get to that termination condition. 10.2 gave a low risk entry as it started to head down with all that momentum. Range chart confirmed it. Out at trouble. Pretty cool, right? Not quite a trend trade. It almost made it. Nice trade. Nice trade, Gary. Momentum on every chart. It's hard to not think about going short, right? All right, GWC, we got 3 of them here. We've got triggers below, not a termination, maybe a little overrun. Everything rolls. Snaps right back. You were probably looking for that HVA. I don't know if you got into this one. That's a hard one to pick because you're kind of caught at that very beginning of momentum, and that's what it looks like. And I may have actually caught this one. I think I took that long. No, that's crude. I didn't take that long. I took one that looks like it. So this is a little bit of overrun without a doubt. The small triggers, it's hard to see if they actually broke or not. So let's zoom. Yeah, that's pretty, GWC, that's pretty close, right? That might be a little bit of overrun. The smalls don't really break. And you know that when there's a termination, you're looking for that quick snapback when these go up strong. And that's it right there. And it gave you 2 shots. And if you took the first shot, you might have managed out and taken the second shot. And then just no reason to exit. I love this trade. What a beautiful trade. Guys, this is how when you start getting good at this stuff, you'll take advantage of those termination conditions going the other way. And then there's another one, termination. You catch the momentum and you ride the momentum all the way up. Oh, and then you jump in with the momentum right before the fib. The momentum goes away. And once again, guys, if I can just talk about how smart this is. When the momentum goes away, he knows it's going to turn into a trend trade. So he just adds contracts. I love this trade. And the large chart led the way the whole way. GWC, do you trade without synthetics on purpose? Because I thought you had them here. You did have them here, but they disappeared here. You have synthetics, you don't have synthetics. Guys, can you hear me? It might be Jen. I want to make sure. Yep. All right, so it's Jen. She'll reboot real quick. So try this, GWC. Just go to your small chart real quick. Right click, go to templates, and just reload that 5-1 on there. And that should get you where you need to be. That was weird that they were there in one and not in the other. But guys, I'll notice these things because I'm always looking for synthetics. But the cool thing is that mid-band was right inside of those large triggers. So I know it was just a perfect entry. And I think what I think is so cool, and there's the one right before it, is that when a momentum trade dies, GWC knows that if the large chart still says up, it's just going to turn into a trend trade. And he doesn't panic. He says, hell, I'll add more. I love everything about this, GWC. Everything about it. That's experience coming in, guys. That's having a plan. Wow, no trade, but watching NASDAQ on a 23 and 10-2, 4 pullbacks on the smaller chart force the larger chart to go down. Neat to see the rules work like they're supposed to. It is, isn't it? And Iron Mike, I know that you're not trading it. 34, brother. 34 leads the way, not the 21. When you're looking at the NASDAQ, 34 is your big chart. 21 is still pretty fast. And then GWC, same thing, just capitalizing on momentum. You let it get past. You didn't grab this one, so you get it past your trouble and take it up to trouble. GWC, you're getting the microphone next week. I'm going to let you teach everybody how to do what you do. Pretty outstanding, man. Pretty outstanding. And then Jen, 50-50, divergence printed, didn't take it at the area inside of favorable large triggers. Well, there is no area inside of favorable large triggers, Jen. There's a 50-50, and there's one correction point and two correction points. Which one's it going to be? Does anybody know for sure? Is it going to go from up here? Is it going to hover in the middle? Or is it going to come down and close the gap to those triggers like it does? What do you suppose, Jen? Those aren't inside of favorable large triggers. That's like an Oreo. There's your double stuff right in the middle, right? So it could go here and it could go there. But here's the deal, Jen. If you wanted to take a shot at it there, your stop's down here. Or you could wait for a reversal bar. Right? Like you could wait for some sort of confirmation. You've been lied to so much, it's nice to see rules work. Have I been lying to you, Rob? Rob? I hope not. There's a lot of snake oil salesmen out there, aren't there? All right, Iron Mike. Let me read what you wrote, because you didn't write it on the chart. Winner, winner, all three rules aligned, made the first target, closed before the second target when I saw the small triggers heading into large triggers. 1-to-1's coming up. All right, so Mike, we did get the lesson, target, not termination, right? Want to make sure. One-to-ones are a target, not a termination. It never made it. So here's the only thing, Iron Mike, that I want to address, and I'm not mad about it, and it doesn't matter to me because it's your trade, not mine. Put a limit order in favorable large triggers, right? The rules say, and this is just me, the rules say areas inside of favorable large triggers, which means that you're jumping in on the way down, and you didn't even wait for the reversal bar. You just have one floating in the middle. And that's cool, right? With this look, it's likely to go up. Stop placement has to be somewhere down here to really be out of harm's way. In a perfect world, it does this. It comes back and it bounces, right? But the world's not always perfect. Yeah, so that's the Iron Mike. I made this rule, not the high probability trend trade rule. And I'm okay with that. It clearly worked out great, and I love your hold and I love your exit, right? So what you're doing, Mike, is you're finding a different way based on the things that you see to turn what I teach into what appeals to you. Does that make sense? I'm not mad about it. Not mad about it at all. The only thing that I would say is that if it repeats patterns, it may come to here. So sometimes, if you're willing to get in at these triggers, well, the rules that I teach every day, Mike, say put a limit order at an area inside of favorable large triggers. Your entry is put a limit order inside of favorable large triggers. It's a very subtle difference, isn't it? It's a very subtle difference. One of them, and the way I teach it, the blanket rules, give the market something to bounce off of, because triggers are just a moving average. So the way the high probability trend trade is designed is it gives the market something to bounce off of. But you're absolutely right. Sometimes it does just kind of go. But I don't know. So When I talk about advantages, I talk about the patterns that repeat themselves more than they don't. And that one pulled back to an area. And then when it's just cranking, you may be able to pull that one off. But that one tried to get to an area. And that one didn't, right? But it was into a termination. That one pulled back to an area. That one pulled back just above an area. This one pulled back to an area. This one broke the area, pulled back to it. So while I don't disagree with what you're doing, look how areas seem to create the bounce. And these trigger lines, price flows through them a lot. So I always think of trigger lines, they're like clouds, right? But when I give it something to bounce off of right at that trigger line, oh, it adds strength. And yours, Mike, is an awesome, awesome way of capitalizing on this amazing momentum and clear path. So I hope it doesn't feel like I'm knocking your trade. It's just a pattern. It's a little discrepancy in rules. And then Pete, with all the momentum, with the potential to break, you take the pullback. Since it was in between the two, it started going up, and that's what got you in. So Jen, do you see how? Little bit of awesome, like little bit of confirmation in the direction of the trade when you're unclear. At least then you got something to put stops behind. Pete, I like the way you did this one, man. Nice job. And Mike, your large chart read led the way, dude, and it was perfect. And then there's that kind of jump in, right? When he's on the left side of the small triggers, when he's got odds favorable on the large, it's almost too easy, isn't it, GWC? It's almost too effortless. And it happens fast when both charts are screaming. And the most important thing that I can say about GWC's charts today, and the one thing that I'm just so stoked to see, is that he doesn't hope this turns into a home run. When he gets to trouble, he gets the hell out. He goes, this could stop the market, pay me. And that's kind of another example, right? Just capitalizing on momentum. Guys, there's a million ways to make money with this software. You just have to find the patterns that appeal to you. Strong top, odds favorable, clear path, 50-50 developing. Fib support, which may or may not reverse the market. All right. Muser, she may or may not have syphilis. Wait for the market reaction. If there's a fib bounce, I can enter a sell stop and wait for confirmation off of the areas. I love that. Keeps me out of the trade if prices continue in the wrong direction. Momentum did break through, but I want to know if this is a viable approach. So Muser, what you're asking, and I'm going to rephrase it to make sure that my brain is there with you. You're asking, since everything looks awesome, but I know that this can be problems, I know where the market should continue, but rather than just jumping in, I'm going to force it to give me a reversal bar. Did I say that right? If the market isn't giving me the perfect entry, is it okay, since it's my money, investment, etc., to insist that it confirms the move? Hell yeah. Muser, remember all the work we did on split triggers? And that one thing, when it just wasn't perfect, it was okay to force the market to tell you that it was going the right direction. I love it. Because the cool thing is if you never get that down bar, then you never take the trade. And that's exactly what you said. Guys, this is how plans get adjusted. This is how things change, right? If it's not perfect, how do I still capitalize, but manage my risk. And that's exactly what you did, Muser. And I've got the same thing. So when I trade the NASDAQ, when I get divergence off the high in the NASDAQ, I insist on a reversal bar at my areas. I don't just jump into this trade because the NASDAQ's a little different. And what it means is that if there's no bar, there's no trade. And if there's no trade, there's no loss. And if there's no loss, there's no sad. So I love it. And Muser, I think it's such a solid way to do it that I've got that picture in my spreadsheet to remind me that I'm the one that's in control, not the market. I'm the one that's in control, not the market. The market's going to do whatever the market wants to do. The only thing I'm in control of is whether or not my rules are met. Jonathan Christoph, are you trying to piss me off today? You went from chasing everything. No, not at all. You're thinking it intelligently. I think that is such a solid line of thinking. Jonathan, are you in here? I'm going to say one thing 1,000 different ways because I ramble. Are you ready, Jonathan? Left side of the trigger's momentum. Easy money at the exit. Break the area. Left side of the trigger's momentum. Early entry. You could have held it up to there. Jonathan, we found your trade. Guys, not everybody's a trend trader. Not everybody sees the trend trade. Not everybody gets the entries. Jonathan, this is freaking amazing. Because check it out. These two trades look like these two trades. Looks like this trade. Looks like that trade. Doesn't it? They all look the same, Jonathan, and they all have the same result. So, Rob and Jonathan, I'm telling you right now, I couldn't be prouder. I'm having one of those moments where I wish you lived across the street so I could come over and high-five you. And Rob is saying, but what about those anything can happen triggers? That's a great look, Rob. Great recognition. Great recognition. I'm going to show you something real quick, guys, and this is pretty cool. I'm going to take everything off. I'm going to take everything off of this chart. Whoops. Except for trigger lines real quick. This is a small chart. I'm going to get rid of the Pro Trader, divergence. I'm going to get rid of the synthetic Pro Trader, and I'm just going to leave the triggers. And I want you guys to see something. So, Rob, I love that you noticed the anything can happen triggers. I'm going to show you guys the coolest little phenomenon. Are you ready? Prepare to have your minds blown, ladies and gentlemen. Why do we teach the high probability trend trade? Because a high probability trend trade teaches you to look at your chart and teaches you to recognize in the moment momentum and a clear path. And it teaches you to find a very conservative, high probability entry on the small chart. Have you guys heard that stupid phrase that I say every day, that it's a stepping stone? So what's cool, Rob, I'm going to show you this little thing. I want you to see where the price gets to the left of the green triggers, right? Strong triggers. And that market continues up all the way until I get a close on the wrong side. Here's price below the small triggers, and it continues all the way down until I get a close on the wrong side. And then after the close on the wrong side, once it gets back above, it continues up all the way until I get a close on the wrong side. And then when it gets back above, it continues up until I get a close on the wrong side. And it continues up until I get a close on the wrong side. So, Rob, this is momentum, right? This is the fastest form of momentum. This is what we call the momentum phase. You don't see it as much on the large chart because the large chart's such a big, slow, rambling chart. So here's the deal. if I have a clear path, right? Rule number 2, it's okay. Small, Pete. Small, 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 small. If I have a clear path, and guys, this is key. If I have a clear path on my large chart, if I have a clear path on my large chart, and I'm on the left side of these small triggers, guys, look at it didn't close and it kept going, right? It didn't close and it kept going. It didn't close and it kept going. So Rob, what I can do is I can say that if I have a clear path and I have this level of momentum, shit, I might be able to make some money. Look where he exited, right where the market may stop. Look where he re-entered when the clear path was there and it was still on the left side. Guys, this is not a high probability trend trade, but I'm seeing so many of you guys taking this trade that I feel compelled to talk about it. I feel compelled to say, look at the advantages, guys. That's all we're doing is we're looking at the advantages on the chart. And the small chart momentum phase, guys, the small chart momentum phase. When the price bars are left of the small triggers, there it is again. There it is again. There it is again, right? Even going to the other side, this may not be your trade because it's fighting stuff, right? So find that flow. Find that flow where the large chart says that the path is clear. Where are we at right here? So let me put a circle. Large chart said the path is clear. Right about there. Really not an opportunity, right? Because we just got the close below right when it cleared, and then we just get another close. Chances are you lost this trade. But this one sure makes it look easy. And the thing is you got to be willing to lose this trade. If you're going to bank on just a clear path and that immediate momentum, if you're in, right, if you decide to get in right here and then you get the close below, you got to be okay with the idea that you're not going to win every trade, guys. But if you let the large chart lead the way, if you get that clear path working, and of course it's way better if you have odds favorable momentum too. It's way more likely to work, but you'll start to find it. So momentum and anything can happen triggers. If price closed on the right, then that's the end of your momentum, right? If price closes on the right side, that's the end of your momentum. Rob, this is your best look. This is your easy look. Odds favorable. I don't care who you are, what you do, what you're trying to establish with your trading. This will always be odds favorable. This will always be anything can happen. And when anything can happen, guys, anything can happen. You don't have to be in every move. But with these absolutely going, there's going to be opportunities. Does that make sense? And I'm going to tell you guys right now, you're going to mistake this. You're going to create challenges for yourself with this plan, trying to jump in every time you think there's a trade without having any set rules, without having any written rules. I know because I lost almost every trade I took trying to learn this. Because I was trying to be like Ron C. and I didn't understand. Guys, there's got to be large chart leading the way. Large chart says odds favorable momentum. Stuzio takes a pullback to the midband directly into a termination condition, and it scares the hell out of him and he jumps out. Not at all. It lost momentum. You didn't have momentum on the large chart, Jonathan. Everything says down 50-50. Stuzio jumps in 74. When the entry was 81, 7 ticks up is where the entry was. Gets out of trouble. I love it. Strong triggers are great, Stuzio, but you jumped in hoping momentum would work, and it pulled right back to resistance inside of favorable large triggers. Iron Mike, do you see it? You can get in at the triggers, but it's more likely to pull back to areas inside of triggers. That's patterns. You can get in at the triggers, but it's more likely to pull back to an area. Not guaranteed, but it's more likely. Which means a little bit of patience adds profit and reduces risk. And then Stuzio said, you know what? When the large chart has odds favorable momentum, I'm going to find a way to capitalize on the small chart. When I understand momentum and clear path, I can find a way to get paid. And that's exactly what he did. He found a way to get paid. Pretty cool, right? Guys, that's all the pictures. So what's the moral of the story today? I guess the moral of the story is that learn to read your indicators and you'll find ways to get paid. Learn to read your indicators. Talk to yourself in terms of advantages and you'll find a way to get paid. When the large chart has this much momentum, GWC says, I've got room to trouble. I'm on the left side of my small triggers. Guys, it's not a big move. And he says, I'll take the first one off at trouble and I'll hold the second one. And the exit here is pretty much the same exit here with the reversal bar, but he exited because of a big, ugly fib. He didn't hope, didn't wait. And then, Rob, do you see how it began with odds favorable momentum? And it ended at an area with anything can happen triggers. He didn't wait on the small chart. And follow the rules, Pete. Follow your rules. So let me give you guys something real quick. I haven't given this one out in a long time. All right, so here's a template, guys. If you're creating a plan outside of the high probability trend trade, if you're creating a plan outside of the 50-50 plan, of the plans that I give you every day, each time I add a new trade, guys, and this is true for me, for John Novak, for anybody that's creating looks outside of the plan. A new look, a new scenario, I have to make sure it's repeatable and testable. How am I doing that? By annotating, by taking pictures of the exact same thing. And my result should produce a trade that's been proven to win more than it loses, therefore providing me a statistical advantage. This doesn't happen from 10 trades. I need probably 30 to 50 to get an idea. 30 to 50 to get an idea, which means I got to do work. If I'm going to develop a new plan, I've got to do the work. And that's cool. And I've got to define my entry. So the one thing that I see you guys doing is not defining your entry on these jump in trades. Why are you jumping in? Make it repeatable, right? When I talk to Ron each and every morning in class, he posts. Let me find the Ron C trade that I took this morning. Gosh, I take a lot of pictures. These are all from today, guys. I don't even know. I think it was back here. Hell, I don't know where it went. Hold on. There we go. So check it out. I don't even have a 2-chart look. Yeah, I do. So the one thing that I did, so when I was trying to learn Ron's trade, guys, I was trying it right here and I was losing. And I was trying it right here and I was losing. And I was trying it right here and I was losing. And I was even trying it right here and I was losing. Because I didn't have entry criteria. I thought it was just a jump in. That's all it was. True story. I thought he was just jumping in arbitrarily because of strength and getting paid. Does anyone else feel that way? And then what I realized, because he was nice enough to share his plan with me, is that the back of the bar on the large chart had to clear trouble. Guys, I don't have any rules in my world that say the back of a bar clears. And then he looks for an entry, which is why his entries always seem to be a little further down. And the one thing that he had is he had very clear targets as well. So what he did, and it was pretty cool, is he took this and he defined his entry exactly what it had to be. And any rules for that entry, strong triggers, clear the area, right? All those different things. And you create a checklist for that entry. And then you got to show 10 pictures of your perfect long, 10 pictures of your perfect short, let them be the same. And then you've got to figure out your management plan for it too. And guys, if you don't know exactly what it takes to get you into a trade, if you don't know exactly what it takes to get you out of a trade, then you're letting emotion and fear and adrenaline, all those things, kind of take over. And once you know exactly what it takes to get in and you know exactly what it takes to get out, well, then it's just a matter of whether your rules are met or not. Does that make sense, guys? I know I'm losing people fast when I get preachy at the end. So you have to be able to look at your chart and say, you know what? It's a strong trending market and I have a clear path. Maybe I'll look for an entry. And if I jumped in just hoping it gets to the next area, I have to be aware of what might take me out. Jonathan, you've posted this one about 4 times now. I still love it. It's stuck on your clipboard. It's beautiful. Is the picture you're trying to post not posting? It was an oops. No worries. I dig an oops. So guys, I would literally, and this is what I did in my trade this morning, what I've been doing, I'll have a stop right here on the reversal bar marker. And if that stop doesn't get hit, I'm just chasing price up until it does. Does that make sense? As long as price isn't closing below these small triggers, there's my stop right there. As long as it doesn't hit this reversal bar marker and I'm in a momentum trade, I'm going to stay in the trade. That's my rule, guys. That's my rule for exit. When I'm using those small triggers on a small chart to hold for bigger moves. I took one this morning. I don't know where it went. I probably lost it. No, that's it right there. Can you remind me of the large chart, the small red line, not all the way across crude presently? Right here? Of course I will. Check it out. What are the fibs? A short story by Mark Novak, illustrated by John Novak. So on your large chart, Jen, and everybody else in the room, your software takes fibs from 3 different time frames. It'll take it from the small chart, your 5-1. It'll take it from the 13-2, the native fibs, and it'll take it from a 21-3, from a higher time frame. And what decades of study have taught us is that when you include the time frames from 3 different levels, right? Fibs from 3 different levels, your accuracy goes up dramatically. So the skinny ones that don't seem to go to the right, these are from the 5-1 chart. The big fat ones that don't extend all the way to the numbers, that's from the 21-3. And then the ones that extend all the way, that's from this chart. That's from the 21. So when we go back and look, it's reaching resistance right now on a 21-3 chart, Jen. And for you guys holding, did you notice that I never got a close below? No, you can look at it right here. But does everyone notice that I never got a close below and therefore I never had a reason to enter? Sorry, Rob. Skinny that don't extend all the way are from the 5-1, but it is still resistance. So what you guys have to do is resist the urge to weigh them out. Resist the urge to give them more power, because here the 21 stopped it cold, right? Here a divergence low stopped it. Here the 13.2 stopped it. And here the 5.1 is creating a bounce. So that's why I love the phrase lines on a large chart. Lines on a large chart. Don't say that a 1-to-1 is more important than a fib, is more important than a divergence low. Just let them be lines on a large chart. And then once again, you guys that are embracing the idea that I won't get out till a reversal bar, look at how far it's still going. It still hasn't told you to exit this trade yet. If you got out at resistance, that's totally cool. But if you're saying to yourself, I'm holding for the big one, oh, there we go. Another reversal bar. Every time this moves up, so does your stop. Guys, I'm telling you, you could chase this thing for an hour. Does that make sense to everybody? Large chart sucks, but if you're in it already, let the small chart take you out. I love this look, guys, and I'm telling you, I've seen it for a long time and I've understood the idea for a long time. I have incorporated it into my trading over this week. This week I really started using it in my trading and just following this reversal bar marker with my stop. And guys, it has paid huge dividends for me. And it's getting me to where I'm holding for bigger moves. And guys, everybody has a thing. My thing is I don't typically hold for bigger moves. And I'm going to see if I can find one from yesterday that I was sending my brother. So there's one yesterday where I enter the trade and this thing's just going up. And look at where my stop is, right on the reversal bar marker. And I'm just being patient and I'm just waiting. And if I never get it, hell, I'll never exit. And it's adding $100 to $150 a trade because sometimes the market doesn't stop. And sometimes it's pulling me out of the market and then it runs. But I know exactly what it takes to get me out of the market. So there's no fear or opinion anymore. Talk to me, Parker. What you got? Guys, good lessons today.